Hello everyone. Lot of things happened last night. US government released their consumer inflation data. Trump made a deal with another country. Big US banks released their earnings. And from India perspective, India's trade deficit becomes narrower. All of which we are going to discuss today. This is the pre-market report video for 16th July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, before the US market opening, US Bureau of Labor Statistics released their consumer inflation number for the June month. As usual, in the SNP, the top two row is core inflation, that is without food and fuel, whereas the bottom two is overall consumer inflation, CPI with food and fuel. So, on a yearly basis, overall inflation increased by 2.7% and core inflation increased by 2.9%. Here, overall inflation was above the analyst expectation, whereas the core inflation was better than expected. And compared to May month, both the metrics became worse. Comparatively, core inflation came better, increased only 0.2% against expectation of 0.3%, whereas overall inflation increased by 0.3% but in line with the expectation. Here, as we discussed multiple times, always core inflation month over month is the top priority, which came lower than the expected. Hence, market took the overall data as mixed, neither positive nor negative. So, 10-year bond yield increased to above 4.5%, but eventually dropped to around 4.49%, which was against what the market wanted. In addition, US big banks and investment firms such as JP Morgan, Wells Fargo and BlackRock released the okay quarterly results, but they cut their annual expectations. Hence, all those stocks decreased between 1 to 6% and this made the US market to close negative. Here, Nasdaq alone closed positive 0.18% because of Nvidia as the US government relaxed the chip export to China. On the other hand, Dow Jones decreased 0.98%, S&P 500 was down by 0.4%. In case of VIX, it marginally increased and moved near 17.5. Then about oil, it didn't change much as there was no oil influencing event. At the time of this video, WTI crude oil closed at $66.7 per barrel and Brent crude trading at near $69 per barrel. Regarding major Indian ADR stocks, all closed positive between 0.3 to 1.3%. However, all those respective ADR stocks in the Indian market increased more than they did in the US market. So the arbitrage difference is showing flat to negative. Then about Reliance GDR, it closed absolute flat and the arbitrage difference same as ADR is flat to negative. In line with that, ADR GDR subdued price action and as a consequence of the negative US market, today early morning GIFT Nifty dropped to 25,167, equating that with the spot market. For now, it's indicating the gap down opening of above 100 points. That's the overall about the global market. Now let's move to the Indian market related info. Yesterday evening, Indian government released the June month India's merchandise trade balance data. In April month, the deficit was 27 billion US dollars and then in May month, deficit improved to 22 billion US dollars and now for the June month, it further narrowed to around 19 billion US dollars. Here, please note anything around 20 billion US dollar deficit, India can manage the balance of the payment with the help of service export and remittance. So now this will provide some sort of support to the Indian rupee. And also this narrower trade deficit is mainly due to the export surge to US which increased by massive 23%. So potentially we could say all the Indian companies who has significant export to US will be in focus today. Then about institution, in the cash market after two trading sessions of net selling, FII turned as marginal net buyers. The net bought for just 120 crore rupees. On the other hand, DI continued to net buy for substantial around 1500 crore rupees. Moving to derivative market open interest analysis. First, in the index option, yesterday proprietary traders sold lot of put options. Hence, at present, from net 3% of their open interest on the bearish side, they reduced it to net 1.9% open interest. So, still proprietary traders wants the market to go down, but the position has improved. Similarly, FII also reduced their net above 4% open interest bearish position to net 3.5%. On the other hand, retail traders reduced their net 7.5% bullish open interest to 5.75%. So in short, only retail traders is positive, proprietary traders and FIIs are still inclined to the negative side. In addition to this, in the index future market, FII are holding 81% of their open interest on the short position, whereas retail traders are holding 64% on the long side and proprietary traders are more of neutral stance. Overall, combining both the market, clearly FII wants the market to go down while retail traders wants the market to go up. Then proprietary traders case, they are neutral with negative bias. As a summary, US market closed mixed and US banking stock results were not good. In line with that, our GIFT Nifty is indicating a gap down opening of above 100 points. Here, one more thing, Trump announced a trade deal with Indonesia, and as per the new deal, all Indonesian exports to US will attract a 19% tariff, while all US exports to Indonesia will be subject to zero tariff. Anyway, moving on, as per stock open interest, HCL Tech, Inox Wind, Prestige, ICICI Prudential Life Insurance, NMDC, IDFC First Bank and Kotak Bank are some of the 33 stocks that got an increase in open interest along with a negative close, indicating the short build-up. On the other hand, Eternal, Nika, M&M Financials, Union Bank of India, Ultratech Cement, Oil India and Shree Cement are some of the 17 stocks that got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, Tech Mahindra, ITC Hotels, Angel One, DB Corp, L&T Tech and Reliance Industrial Infra are some of the major listed companies is going to release their earnings. Regarding macro, during our market hours at 11:30 am, UK's consumer inflation and at 2:30 pm, Europe trade balance and at 3 pm, Germany's 30-year bond auction is due. Then in the night for US, 30-year mortgage rate, PPI data for June month, retail sales data, industrial production growth and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened near flat but after initial 2 hours, it quickly increased and moved closer to 25,250 mark but closed around 25,200 mark. Thus, on the daily chart, Nifty formed a bearish candle with minor upper shadow which is indicating the buyer's interest around the 25,000 support zone. However, RSI indicator still having the negative crossover and still closed below the 20 exponential moving average. So the immediate resistance zone is at 25,300 to 25,350 mark with a strong support at 25,000 mark. In case of Bank Nifty, it opened negative but as the session progressed, it kept on increasing and managed to close above 57,000 mark. Thus, on the daily chart, similar to Nifty, Bank Nifty formed a bullish candle with a minor upper shadow following the doji candlestick pattern. Hence, it's confirming the buyer's strength at lower level and also Bank Nifty managed to close above 20-day exponential moving average, which means Bank Nifty outperformed Nifty. So here 56,800 to 56,700 zone expect to give some immediate support which coincides with 20 exponential moving average, and on the upside 57,200 to 57,300 zone will act as the crucial resistance. On the weekly options front, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,200, with maximum new call option rating at 25,200 strike, followed by 26,000 and 25,250. Then on the put side, the maximum open interest was at 25,000 strike, followed by 25,200 and 25,100, with maximum new put option rating at 25,200 strike, followed by 25,100 and 25,150. Thus, from options data, it's suggesting the immediate resistance at 25,200 and strong support at 25,000 to 25,100 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.